Welcome to Fear and Greed, business news you can use today. Business investment ramps up as the economy picks up steam. The banking regulator introduces new rules to dampen home lending. And Barnaby Joyce quits the Nationals. Plus, reports that almost half the Big Bash League, a domestic cricket series, will be up for sale. And confirmation that dogs, including chihuahuas, come from wolves. It is Friday, the 28th of November 2025. I'm Michael Thompson. Good morning, Sean Aylmer.
Good morning, Michael. I'm loving our final stories each day this week. Just a little bit quirky, shall we say?
Yeah, with limited business relevance, but guaranteed it's the thing that you'll be talking about when you actually get to work, right? It's the, hey, did you hear about the wolves? Yeah.
The wolves.
Anyway, we'll get to that a bit later on. We actually have real business news to talk about before then. The main story this morning, Sean, business investment, a key component of economic growth, had its biggest jump in 4 years during the September quarter as evidence grows that the local economy is starting to pick up a head of steam.
That's right, a boom in new data centres pushed new capital expenditure 6.4% higher, way ahead of expectations. 6.4% is a big number in that world. Data centres fit into the info, media and telecom category, and in terms of business investment, that's the category way in front of any other over the past 5 years or so. Significantly, businesses are looking to invest even more in coming months. Yesterday's data feeds into next week's September GDP figures, really should give them quite the boost. Now, business investment in many ways has been a missing piece of the economic puzzle in recent years. Yesterday's ABS figures augur well for growth. In fact, business investment used to be about 20% of GDP. It's down to about 11% now. So we really need a pick up in it. The data comes as a bunch of economic indicators and anecdotal evidence suggests the economy is just starting to come back to life. Yesterday, the banking regulator warned of overheating in the housing market. More of that shortly. Earlier this week, the October inflation figures were well above expectations, triggering a winding back of any interest rate cut expectations. Remember last week, the unemployment level fell from 4.5 to 4.3%. And in equity, several retailers, notably Harvey Norman, have outlined strong first quarter sales. Now, not all retailers have done that. This week's Black Friday, Cyber Monday sales are critical, but there's enough evidence in the retail sector to suggest that households are spending again.
Sean, part of this that doesn't really make sense to me, the economy might be picking up, but it does feel like a lot of people wouldn't be and aren't feeling it. The cost of living crisis hasn't gone away. Based on what you said, is it more about an improvement just in very specific sectors like technology with all the data centres, etc.?
I think that's a fair comment. If you look at the CapEx numbers yesterday, investing in construction is trending lower, for example, so too in rental hiring and real estate services. Mining and retail trade are flatlining. I suppose the risk is that tech and sectors associated with tech really outperform while others around housing, construction underperform, and that is a real risk. Sitting over all this, of course, is inflation. It remains a problem. We've had 3 rate cuts, but given prices are now rising faster than the Reserve Bank wants, maybe we're headed for a rate hike. Even talk of a rate hike can pretty quickly dampen any rebound. But to your question, Mike, we might be able to talk about a 2 or 3 speed economy at some point in the future. That'd be very exciting. But right now, we are definitely seeing some real green shoots, some real strength in parts of the market, like technology, data centres, but not in others.
Okay, all right. Now, you did mention before, almost in passing, new rules for the housing market. The financial services regulator has introduced new restrictions that limit how much banks can lend and how much some borrowers can receive, because it's growing wary of rising risks in the property market.
Yes, so this is for home occupiers and investors. The Australian Prudential Regulation Authority will limit loans made by banks for mortgages to 6 times the borrower's income. From early next year, no more than 20% of a bank's new mortgage lending will be available to customers borrowing 6 times or more their income.
How does that work? Maybe, perhaps, if you could paint us an example. An audio example, Sean. Normally you'd use a whiteboard for this, but you're going to have to do it just with words.
So Sydney's probably a good example. I mean, it's sort of at one end of the market, so yeah. I take that But the median house price in Sydney is it's 1.92 million. It's nearly 2 million. So let's say 2 million. Let's say you save the 20% deposit. Pretty normal, $400,000. Don't know how you do that, but you managed to do that. There's also money for stamp duty, all the extras. Let's say you don't need to, you save for that as well. We'll be generous. So you need to borrow 1.6 million. So that's the 400,000, 2 million minus the 400,000, 1.6 million.
Yep.
That means to get a loan, you're going to have to earn 1/6 of that, which is $267,000 a year. Not many people earn $267,000 a year.
Oh, wow. And suddenly you can see this becomes a real challenge for a lot of those critical services industries. But think your teachers, police, fireys, etc. And they then get priced out of markets as well. This is quite significant.
Yeah, I mean, APRA Chair John Lonsdale spoke about investors. So what you find, investors take on a lot of leverage. Mm-hmm. So their incomes, if you've got 1 or 2 or 3 investment homes, you don't have the income necessarily to meet these guidelines. And I think they're trying to take the steam particularly out of that. He said the regulator is not prepared to wait for a build-up of trouble in the sector, so decided to introduce the debt-to-income rule. There'll be a lot of people who are not happy about this at all.
Okay, but APRA's trying to get in ahead of the game. They're trying to stop it, which makes a lot of sense, right?
It does. I don't know. I find this a bit difficult. The banks are in a bit of a rock and a hard place here because they've got to follow the rules from APRA, but then they've got customers rightly saying, hey, can't we lend us money? And the banks say, well, no, we can't because under this rule and other prudential regulations, we can only lend so much. So suddenly you're getting a bunch of people, construction people going to private credit.
Yep.
Now, that might be great, but you've got to get the right provider of private credit. And if you get the right provider, fantastic. If you don't, it's not quite as well regulated. So there's flow-on effects from all these things.
Okay. All right. Plenty in that one, as you say. There'll probably be plenty of reaction to it. Barnaby Joyce, this is something else that stirred up a bit of reaction, Sean. Barnaby Joyce has formally resigned from the Nationals, ending his 20-year parliamentary career with the party and clearing the way for him to join right-wing minor party One Nation, though he's not saying that yet.
No, he announced the decision in a statement to the House of Reps yesterday.
Yeah.
The twice leader of the Nats, twice deputy prime minister. He said he had not had conversations with national leader David Littleproud about staying in the party, which I just find extraordinary on its own.
Yeah.
He said he doesn't think the coalition can win the next election, and those focusing on winning back Teal seats were pursuing the wrong strategy. He also highlighted the shift towards the right in many major countries, including the US, of course. He didn't confirm he'll join One Nation. He did say he was strongly considering accepting a proposal to run as a One Nation Senate candidate in New South Wales.
They were lining up to have a crack at him yesterday, weren't they? Former colleagues.
Sure were.
Yeah.
Left, right and centre, all the Nats. And fair enough. Yeah, fair enough.
Yeah, he was the leader. He's been part of that party for a very long time, and it's not a good look for the party or for the coalition for someone who has been pivotal to the success of that party over some time to be leaving. But he did say that, yes, haven't made any decisions, might go into business, might leave this place entirely. Come on, Barnaby. We all know you're going to One Nation. You wouldn't have been sharing a steak with Pauline Hanson the other night if you weren't really, really about to do it. Anyway, lots still to get through, including, Sean, the story we're all waiting for, the chihuahuas and wolves. Back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has done a deal with the Greens to pass Labor's overhaul of Australia's environmental laws on the last day before Parliament breaks for the summer recess.
The government gave a series of concessions to strengthen protection of native forests and bushland, to carve out fossil fuel projects from fast-track and national interest approval pathways. Under the changes, regional forestry agreements in New South Wales and Tasmania and high-risk agricultural land clearing will be brought under the new Environment Protection and Biodiversity Conservation Act. That's from the middle of 2027. Now, yesterday's move very much has angered a bunch of farmers, forestry groups, Labor's tried to sweeten the deal with a $300 million forestry fund, which Albanese said would deliver a bigger and more sustainable logging industry. The Greens also secured an additional $50 million for the ABC to produce Australian content. Got nothing to do with the environment whatsoever, but that was just thrown in. There was also changes to address business concerns. The government will make clearer a power that would allow the minister to kill off projects that are deemed to have unacceptable impacts before they're fully assessed. Labor will also impose stricter conditions on the powers of the new National Environmental Protection Agency, which kicks in next year.
The gender pay gap, Sean, is narrowing, but still remains too wide, with women still earning, on average, about $28,000 less than men.
Now, that's less than a 1% improvement on last year, according to data released by the Workplace Gender Equality Agency. In 2025, women earned on average 78.9 cents for every dollar a man earns. Finance Minister Katie Gallagher said there is progress, though not as fast as many women in the country would like.
Quick wrap of the markets. What happened yesterday on the ASX, Sean?
S&P ASX 200 closed up just a touch, 8,617 points, steadier day than recent sessions. Broadly, the tech stocks did best on the back of a strong night on Wall Street. Energy stocks did worst. Not a lot going on with the banks. CSL and Goodman outperformed. Rio Tinto, Fortescue Metals lower. One that did do well, WiseTech Global, share price jumped 6%. Finally, some good news for that struggling software group.
Yeah, indeed. Now, Cricket Australia is aiming to raise $600 million from the partial privatisation of the Big Bash League franchises.
The administrative body intends to sell 49% of what could eventually be 10 franchises in the domestic 2020 competition, according to a report in The Australian. Now, those of you who don't know what the Big Bash League is, a domestic cricket tournament. Each team faces 20 overs. They seem to be belting it the whole time. For mine, it's on TV every night over the summer. If you're really lucky, you watch the test match during the day, then the Big Bash cricket at night. You can watch cricket for 10 hours a day in summer. Which I like the game, but tell you what,
it is a lot of cricket, but it is extraordinary to see just the difference between, say, test match cricket and then you get into the Big Bash where it is just chaos.
It is. And it's amazing that they've created this product that the market likes so much.
Yeah.
Cricket Australia will need to seal agreements with the state bodies to realise the vision, values the 10-team competition at $1.2 billion. Now, who would spend, $600 million, so $60 million per team on average? Any thoughts?
It's got to be.
Think of the Indian Premier League, same guys that probably put money into India or the Indian Premier League, more likely to come and put it into the Australian Big Bash League.
See, I didn't realise you were asking me just then. I thought you were asking one of your famous rhetorical questions where you're actually just asking yourself.
To be honest, I started asking you, and halfway through I thought you might not know the answer, so I tried to make it rhetorical after that.
And instead we just drew attention to all kinds of communication errors where you're waving at me and I'm looking at you in the studio and absolute chaos. It's like a game of Big Bash. Now, international news, Sean. The number of, this is an interesting one out of the US, the number of transactions of $10 billion or more have hit an all-time record in 2025. After Donald Trump's deregulatory push unleashed Wall Street's animal spirits and triggered a run of global deal-making, an absolute deal frenzy, Sean.
A deal frenzy with animal spirits and everything. This week, Naver's $10.3 billion acquisition of South Korea's biggest crypto exchange, Upbit, took this year's mega deal total to 63, topping the 2015 record, according to the Financial Times. It comes despite a sluggish start to the year after Trump's Liberation Day tariffs. That's created volatility, not much going on. But deals really roared back in the second half of this year. CEOs pounced on a once-in-generation transactions. Union Pacific's $85 billion bid for Norfolk Southern, another railway company. There's a $55 billion Saudi-backed take-private of Electronic Arts, the gaming group. Anglo American's $50 billion merger with Tech. Don't mention that one to BHP. And Kimberly-Clark's $49 billion takeover of Tylenol maker Kenvue. The second half of the year has been busiest. Trump kind of pulled back from a full-blown trade war with China, withdrew some of his more aggressive tariffs, also doubled down on M&A friendly measures, antitrust rules, etc. So we're just seeing this absolute splurge in M&A activity.
to go from the most extreme kind of business story to the complete other end of the spectrum here, Sean, a new collection of 8 canine genomics papers, which is not a sentence I thought I'd ever say on Fear and Greed, that's been published this week. They have found that nearly 2/3 of modern dog breeds, including even chihuahuas, contain traces of wolf DNA.
And in fact, some of these are quite recent wolf DNA. What's this all got to do with business, though, Michael? Nothing. Great story, though.
Yeah, great.
So 20 years ago, a purebred boxer became the first domestic dog to have her genome sequenced. That basically ushered in a new era of canine genetics. Scientists have now sequenced the genomes of thousands of dogs. Researchers are bringing all this data together. That's the pointy end of it at the moment. Other very important nuggets of information from the dog scientists, Michael.
Dog nuggets. Ugh.
I
try and avoid stepping on those usually.
Modern dogs are more highly inbred than previously. That's most been in the late 20th century. I reckon that's the cavoodles. That's the whole of certain inner cities just deciding there's only one breed of dog you can have. The German Shepherd is particularly interesting.
Yeah.
Their population tumbled during World War II. Most US German Shepherds today can trace their ancestry back to one dog, known as Lance of Franjo. Lance of Franjo was famous for having a sloping back. That hadn't been common in the breed, but now
it's everywhere.
Yeah, totally.
Okay.
While dogs come from wolves, the two species nowadays very, very rarely interbreed. And apart from chihuahuas, so like hunting dogs and sled dogs, they've got a lot of wolf DNA. So too Labrador retrievers and Cocker Spaniels. Little Flo, my little Flo.
It's
a wolf at heart.
Oh, God.
A beast of a dog.
This story has got something for everyone, really. We'll finish with actual business. I need to mention Fear and Greed Q&A, Sean. Coming up next, you're speaking to Jarden's Steve Ween, who is answering a listener question for us. And the question came from Michael, and it's about CSL.
And it had nothing to do with you. Michael basically said, why is CSL in the doghouse? And Steve came and gave four very good reasons, and it was just a succinct way about CSL. Then I asked him whether he'd buy now that its value is so much lower. You'll have to listen to find out his answer.
Yeah, great. That is a fantastic tease, Sean. It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which, if you have your own question, like Michael, who is not me, it is another Michael, if you've got your own question that you would like to put to an expert and we can put it to them on your behalf, then send it on through via the website and sign up for our newsletter as well. Thanks, Sean.
Thanks, Michael.
It is Friday, the 28th of November, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.